Welcome back to Blockstream Talk. Today we're talking to Alyse Killeen. Alyse is founder and managing director of Stillmark, a Bitcoin-focused venture capital firm. She's also an independent director on Blockstream's board. Alyse is very clear about the distinction that needs to be made between Bitcoin and crypto. And we discuss how this applies to capital allocation within the venture capital industry, how Bitcoin VC is different from both traditional, internet-focused VC, and also often more narrative-driven crypto VC. We also covered concepts like the democratization of investment opportunities, accredited investor rules, and how, or even if, retail investors can be protected from often much more sophisticated investors. Alyse also shared with us her framework for picking companies, allocating capital, and what she sees as some of the most exciting parts of the Bitcoin ecosystem going forward. This was a really good conversation. If you found it useful, don't forget to like, subscribe, and share. Alyse, thanks a lot for joining us today.
Thank you for having me.
To start off, do you want to give us a brief introduction to who you are, what you do, and how you became exposed to Bitcoin?
Sure, of course. So I'm the founder and managing partner of a venture capital firm called Stillmark, which launched in 2019 and is focused on backing the industry's top founders, folks building in the Bitcoin Lightning Network second layer protocol space. And ahead of that, what I did was, develop a skill set in venture capital by working at other firms. And so I have about a decade in venture capital investing, everything from first check into a company all the way through pre-IPO investments. At Stillmark, of course, we're focused on pre-seed, seed, Series A investments now and do some later stage activity more selectively. But nonetheless, the past decade of my life has sort of been dedicated to supporting founders in executing their visions and progressing culture via technology. And I'm really just incredibly grateful to be able to do that now today in the Bitcoin space, which I think is probably the most, sort of important thing happening or that will happen in my lifetime. Certainly the most compelling and influential innovation that is likely to occur in my lifetime. So it's quite a pleasure to be working in the space and with such talented people. I'm also, as you know, on the board of directors at Blockstream and have been, friends and in conversation with the folks at Blockstream since the very early days, 2014. And I got into Bitcoin just the year prior to that, really on accident. So the story is that I was working in venture capital. I was at a co-working space to support one of our early stage portfolio companies that was using this co-working space to work. And I just happened to sit next to and have a desk right next to someone that was mining Bitcoin, basically there on their, with the machine on their desk. And, through that relationship and proximity and the friendship that developed, I learned about Bitcoin and I saw Bitcoin really first as a protocol, as a technology that an economy could develop on top of, or where entrepreneurial activity could be catalyzed. And so that's how I came into the space. And it's been, almost a decade since that point. And it feels like, everything is moving even faster than I would have expected when I first discovered Bitcoin.
Yeah, that's amazing. When you think of the scale of the industry now, and last night we had news about BlackRock opening up a trust to their institutional investors for Bitcoin, and the pedigree of the investors that are involved in the space now. And only 8 years ago, people were mining Bitcoin at co-working spaces. It's really amazing how far we've come.
It's true. It really is.
So given the state of public markets, and I think probably, Bitcoin markets certainly as well, we've had a pretty big pullback here over the last couple of months, and we've had a period of tightening from the Fed. Has that affected the health of the VC industry at all? And specifically maybe like the health of the Bitcoin part of that?
Bitcoin founders have the advantage of not being granted the opportunity to be naive. And so Bitcoin founders, because they're not just exposed to macroeconomic conditions, but also have to deal with Bitcoin cycles, the 4-year Bitcoin cycle. Founders have always needed to plan for times of strife and of difficulty outside of the company. And you see that those learnings have really positioned founders in the space to be better prepared than a traditional tech founder might otherwise be. And so in Bitcoin, what we're seeing is that founders have built up longer runways. When they're fundraising, they tend to go about it more conservatively, and that they're fundraising to build longer runways than their traditional tech peers might. So it's not atypical to see a Bitcoin founder raising for 24 months or 36 months or even longer than that in capital to secure that length of runway. Whereas in the traditional tech space, we've seen shorter sort of fundraising happening. And then, of course, on top of that, Bitcoin founders have been really thoughtful about how to diversify their cash into BTC at opportune times in order to extend their runway through the appreciation of Bitcoin, which of course is a non-dilutive way to add to your runway. That has to be done conservatively. And like I said at the top, Bitcoin founders are financially more conservative in terms of resourcing their company for the long term and for both the peaks and troughs of company building. And they're reaping the reward of that now. This is especially true at the early stage. And so pre-seed, seed, and Series A stage companies feel very well positioned to deal with both the Bitcoin bear market as well as the macro economic conditions. And in addition to long runways, of course, in the Bitcoin space, valuations, fundings have been done at very sensible valuations, which can't be said of the crypto space and even of the traditional tech space. So Bitcoin founders are again advantaged because they're not sort of needing to play catch up on valuations that got hot.
Yeah, I think for a long time, I mean, maybe even to some degree now, there was a bit of a stigma with investors on Bitcoin. And if you went into pitch a Bitcoin idea, people might like it up to the point until you say Bitcoin. So that probably impacted the willingness of investors and then the kind of valuations that you could generate as well.
That's probably true. So we Stillmark invests in two type of companies. In the first bucket of companies, these are companies that are helping financialize BTC, the asset. And so that would be companies like Akaza that's providing Bitcoin security, or a company like Hoseki, which is allowing proof of reserves, or for people to use their Bitcoin to prove their credit worthiness. Those sorts of companies, when they're pitching, of course, have to pitch Bitcoin forward. So Bitcoin is a part of the pitch. And if a venture capitalist isn't
Yeah.
keen to Bitcoin or doesn't believe in BTC, the asset, that sort of company is not going to resonate with that investor. On the flip side, there's another bucket of companies using Bitcoin technologies to advance the applications that they're building, simply to create utility that's unlocked through Bitcoin technologies, or opportunities, functions that can be made more efficient if using Bitcoin. And for those companies, they can sort of lead with the product rather than leading with Bitcoin. So an example of that would be a gaming company that we just invested in called Pink Frog. And Pink Frog, really what they're doing is just advancing a game that will have peer to peer communications. And in order to create depth of those peer to peer relationships and exchanges, Lightning will provide an opportunity for efficient payment. So it's just a way to sort of provide a better experience for their end users. And when they're pitching really to gaming VCs that understand the gaming space, game mechanics, and what it is to build a user base there, versus VCs that have to be bought into, Bitcoin as a world reserve currency, right? These are sort of different things. And so not all companies need to be Bitcoin forward when they're pitching. It can sort of fade into the background often.
So and then digging into that a bit more, how would you differentiate between Bitcoin focused VC and then crypto VC? And how does token investing versus equity investing factor into that?
That's a very nuanced question. So I think there's like 25 or 30 questions buried in what you just asked. But Bitcoin investing is very different, not just from crypto investing, but also from traditional venture capital investing. in that when you're investing in a Bitcoin company, you need not to just understand the company itself and the team, but also the Bitcoin protocols that that company relies and depends upon. And of course, what's important here is that companies are building alongside or on top of these open source protocols that rely on developer teams that the company itself has no influence over. And so the company needs to be, cognizant of where the protocols are going and understand what the open source protocol roadmap is and how that relates to what their company can do, both in terms of growth and the utility that they can provide to their end users. And so for Bitcoin VCs, you're not just paying attention to a company, their projections, and their team or market, but also to, for instance, what Lightning's doing and how it can scale, or what Bitcoin's doing and what can be done with Bitcoin core technology, or Bitcoin asset as a repercussion of that. And so, investing in Bitcoin companies is really for folks that are committed to proper due diligence and that are thoughtful in their work and able to develop a deep understanding of novel technologies, or technologies that are different from what they've done before. And for this reason, I think you see a lot of the funds in the Bitcoin space are promoted by folks that are younger than many of the peers in the traditional venture capital world, or even folks that are new to venture capital investing in general. So Stillmark, of course, is unique in that we also, in addition to understanding Bitcoin, we also understand traditional conventional venture capital, and so we can apply those practices to the space. But I think it makes sense for folks outside of a venture capital background to come in and to really build, something that can be meaningful to the space, simply because they can understand the tech and the community and the stakeholder ecosystem that will be relevant for the companies they back. Now, in traditional tech investing, we could call traditional tech investing like internet investing, right? So we call what Stillmark does Bitcoin venture capital, but in traditional tech, it's really people backing mostly companies built and based on the internet, on mobile, on a general ubiquitous web experience. And so I mentioned that because I think that while today Stillmark is defined as a Bitcoin venture capital fund, really what we are is a generalist fund that just deeply understands Bitcoin and has a network that can support companies building in the Bitcoin space. But as Bitcoin and as Lightning Network become more ubiquitous, just as the internet and web have, then that sort of will be just table stakes for venture capital in general, because these things will become ingrained in tech culture and in payment spaces and in finance in a way that, to be called a Bitcoin venture capital firm in 10 years, that will be like today saying you're an internet venture capital firm, which most traditional venture capital firms are. The third bucket are crypto VC funds that are generally investing via the purchase of tokens, or that are focused on including equity investments in the crypto space. And I think of these things as very different from either Bitcoin venture capital or traditional venture capital. So I sort of draw the line there. Bitcoin VC can fit more closely with traditional venture capital because you're investing for equity and to back companies whose product finds a sustainable value with a user base that is growing and will continue to value the product that company produces over the long term. Whereas on the token side, of course, where your return on investment is not based on the appreciation of equity, but the appreciation of a token that's completely disconnected from a company's equity value or enterprise value, that's sort of a different practice than venture capital.
Yeah, it feels like the crypto VC part is based a lot more on kind of narrative investing rather than looking at fundamentals. It's about a story and how much momentum you can get behind that story.
That's it. I haven't heard it said that way before, Jesse, but I think that's really a smart way to define it. The other thing is that because the tokens are liquid and you can get quicker liquidity as an investor. On the equity side, of course, when you're investing to purchase equity in a company and you're waiting for that equity to appreciate, your time horizon is, say, 7 to 12 years in terms of producing liquidity on your investment and getting a return on your capital. In the token space, because you can exit really at any point after a lockup period, and you can exit to an
Yeah.
unsophisticated investor or retail purchaser, you know some of the mistakes that can be made in investing can sort of be hidden by that practice. And of course, you can also, I think one of the innovations of tokens is that you can detach, you can pull apart producing a return on your investment from investing in a productive company. So you can put your money to work behind a narrative, like you said, and produce a return without needing for that narrative to ever produce something tangible. And so, that feels like a very different practice to me than venture capital does. The other thing that's very different is that in venture capital, both in the Bitcoin space and traditional tech, when we exit, we're selling equity to a sophisticated group of investors, people that are able to have the capacity, both the resource of time and the capability to be able to do diligence to understand what they're purchasing. Whereas in the token space, of course, you can exit to people that neither have the resource of time or perhaps the technical capability to understand what they're purchasing. And so I think these are just really sort of different practices.
Yeah, I mean that's something that I've thought a lot about accredited investor rules, and should we allow, fundamentally I think that I like the idea of the democratization of investment opportunities, but after going through the ICO boom and then seeing kind of a very similar thing, just rinse, wash, repeat many times with a kind of a different wrapping around it, you do wonder when it looks like a lot of these projects, and it's often the same people, wrapping these things up. And then there's the YOLO investing idea. There's the ape army. And, I suppose the best way for people to learn is to get burnt. But at the same time, it is kind of slightly depressing to see some people make a lot of money on the back of this kind of practice.
Right. So I agree with you. I think that democratizing access to and opportunities to produce a return on your capital is important. And on the flip side of that, people are taking advantage of it. And so you will see, narratives promoted attached to a token, specifically pursuing unsophisticated investors or people, frankly, that are, sort of desperate for economic mobility. And what better time to take advantage of people, desperate for economic mobility than now, when it's quite hard to change, the status assigned arbitrarily at birth. So I completely understand and empathize with people that, as you said, are like aping in to these investment opportunities that come along with really compelling narratives, because people are, number one, very busy, just trying to keep their head above water and make ends meet. That's issue number one. Number two, people want the best for their families and want to be able to not just make ends meet, but produce savings and provide a better future for their children and go on vacation, even just really simple things. And to do that today is challenging for many people, maybe most people. And it feels like some of the activity happening in the token space is taking advantage of that, maybe even intentionally. And so it's hard to balance that, you know, negative condition with the opportunity for folks to participate more fairly and evenly in investing.
Yeah, no, that's a really good point. That's something I've thought a lot about before is, thinking about what life is like for a younger person, just coming into the market. It's tricky to get, where are the growth industries at? At my time, it was to go into finance. I don't necessarily think that's the best route anymore. Housing is so expensive, famously millennials basically everywhere. It's the same in Taiwan, as it is in Canada, as it is in much of the US. People are just literally priced out of housing markets. So, what do you do? How do you get ahead? And I think, YOLO and rolling the dice kind of makes sense in a way, but it's also a very depressing commentary on the state of society and the economy, really.
Yeah, it's exactly that. And so, of course, when you have those sort of conditions of hopelessness and increased risk appetite as a result, you'll have people ready to take advantage of it. But what might be new today is that you have established funds, that are also willing to participate to take advantage of these conditions. And I think that's something that's new, and it's empowered by tokens. It's something that wasn't possible without tokens. And now that it is possible, you see this pent up demand for it.
Yeah, yeah, definitely. And I think that's another thing that I've noticed, especially being in kind of greater China, is the appetite for Ponzi that people have just innately, it will never end. It won't go away. And I think this is something that's happened in like Taiwan and China for hundreds of years. There have been variations of Ponzi's, and crypto is just the latest technological tool that these same people can use to kind of monetize that. So that's something kind of interesting too, that we'll probably just never get away from. That'll always be there. So maybe that is the best way, is you have to open it up and let people, kind of burn their hand and figure it out.
Right. So I understand that argument, and I think it's a popular argument that the way to learn is for people to get burnt. The problem is that because it's sort of become a professionalized endeavor to
Yeah.
promote these narratives attached to a token, that I think it's very difficult for people to act responsibly under these conditions and to do their own diligence. We've seen several examples of that, of collapses on projects that were promoted by people with incredible reputations, that collapsed and burned people, that some of whom had tried to do the work to understand what they were investing in. And so, I mean, this is what's lovely about participating in Bitcoin, is that we're not doing that off the backs of people who are going to get burnt. And so, I think the best use of my time is certainly to be heads down and focused on the Bitcoin space, where we're building products for the long term, hoping to progress culture and financial inclusion, and to offer just a more efficient, effective financial system that not only includes people at the lower in socioeconomic status, but that can also make the experience of finance and connectivity to the global economy less frictionful, even for people of privilege. And so it feels like a wonderful opportunity to do well while also doing good.
Yeah, I guess the key takeaway is kind of, don't trust, verify, right? And I think even the professional investors, they can get caught up in this narrative chasing and herdish behavior too. And I think we've seen that recently, especially in the lending platform space with some of these big blowups, because a lot of these companies just maybe a year ago, maybe even less, they were real darlings within the investment space, and people were touting the pedigree of investors and maybe not digging into the fundamentals as much. And that doesn't seem to have gone particularly well.
Right. Well, not for the retail purchasers, right? So some of the firms that participated were able to exit ahead of retail investors and produce incredible returns on their early investments, leaving retail investors kind of confused and hurt and impaired, and in some cases, very significantly so. So anyhow, I feel really fortunate to be in a space where the opposite is true. And we're thinking about building long-term products that provide sustainable value for, a really large and growing market. And, I mean, the thing that I regret is, I think, the confusion of Bitcoin and crypto. And, I think it's unclear to many people how Bitcoin is categorically different from crypto. And so that's something that I regret. And I hope that we, going forward as a community, can do a better job of distinguishing between these two things. Because, of course, I don't want to see people get burnt by aping into crypto because they confuse crypto with Bitcoin, or think that in some way that, the token of the day has a path like Bitcoin did. but separating those two things, we see them as very separate. Now the work is to make sure that it's clear to others how they are.
Yeah, that's both very frustrating and I think both and very difficult to actually do because people are incentivized to draft off the Bitcoin tailwind. And I noticed this a lot in the sell side research from the big banks is I think they're a little bit better now, but for a long time they would use Bitcoin and crypto interchangeably, and they would set up a straw man for Bitcoin and then kind of attack it as if it was crypto. And you still get that a lot, and I don't know how you deal with that. Maybe that just happens over time, but the fact that there's people who are on this narrative investing side that are incentivized to kind of do that, I think it's really difficult to deal with.
I completely agree, but don't have a solution, except that I think that, Bitcoiners have the opportunity to continue simplifying the language, making sure that when we're talking about what Bitcoin is or what a company or product that we're promoting is, that we're not doing that talking tech to tech, right? We're thinking more
Yeah.
broadly about who's included in the addressable market, and we're making sure to speak their language. So an example of this is, for instance, in secure custody, do we want to be selling multi-sig to people using that term? Or do we want to be talking about be your own bank level safety, maybe something even more approachable than that? But I think just being really conscious of the terms we use and, whether they instill fear or excitement in people that, are not thinking about Bitcoin 24 hours a day, 7 days a week, getting over that, like, sort of, like hump, like maturing in that way in our storytelling will be really important. And frankly, I think it'll make it harder for crypto to ride Bitcoin's coattails if we do a better job at talking about what Bitcoin is.
Yeah, I think I know there's a lot of disagreement within kind of the Bitcoin community about this, but some, like the Bitcoin Mining Council, I think they've been fairly successful at pushing back on some of the, anti-Bitcoin mining narratives. So maybe stuff like that. I think, Bitcoiners are naturally they dislike companies coming together, and they're very paranoid about backdoor collusion, which they probably should be. But stuff like this sometimes seems to be able to have a beneficial effect.
I hope so. I think that Bitcoiners are cautious of people or groups that assume a position of authority. And I think that, there's some, of course, councils or groups that assume and try to um, assume authority and try to throw their weight around. And then, frankly, there's some groups of people that can come together without that intention. And so far, what I've seen from the Mining
Yeah.
Council is that their intention is to be coordinated in data sharing efforts so that they can actually offer transparency on what's happening in mining. So that when we're talking about mining, we're talking about it from a place of science and data rather than emotions
Yeah.
and feelings and FUD, which is, we know that when you're talking about mining from a data backed perspective, that some of the arguments against Bitcoin as being a poor use of energy or as the anti ESG narratives collapse when you just look at the data non-judgmentally. And so I hope that that's what the Mining Council is trying to do. But frankly, in terms of how they've operated, I think that their track record is pretty good here.
So going back to investments, what kind of frameworks do you use to allocate capital to kind of guide your investments? And what are you looking for in companies when you deploy capital?
So there's two simple things, and this is true of traditional tech investing. So we're looking for a team building in a large or growing market. And then we're looking for a leadership team that is able to make excellent decisions. So really you want to back the best decision makers in a larger growing market. Now, in Bitcoin, as I said before, there's one additional thing you need to do, which is to make sure that what the team is building is consistent with what the technology can do. And of course, because we're in a space that's still developing, people can be of opposing viewpoints in terms of what the technology is capable of and can have valid arguments to that effect. And our job then is to make sure that we're studied in the tech, that we have a network, including of people with differing opinions, so that we can really dig in to make sure that when we invest, we're investing in companies that are realistic in what can be achieved and know that the technology is going to support them. So, to give you a quick example of this, in 2014, there was a lot of investments made in payment companies. And those payment companies were promising that they could get to scale that, of course, Bitcoin Core Protocol could not support. And in fact, to invest in payments companies ahead of a mature layer two being present and showing signs of scalability was probably, an ill-advised investments. And I think that because those sorts of investments were made without really studying the tech and knowing if what was promised by those very early payments companies was possible, it created the environment for the SegWit 2x sort of debacle to unfold, because you had these companies that had made promises to grow, and they had done so because perhaps they hadn't studied the underlying protocol or understood the trade-offs that developers were making when they were developing or maintaining Bitcoin Core. And so they had kind of gotten over their skis in terms of promising what they could actually deliver. And there was a tension there. And the VCs that had backed those companies also felt that tension, and that created a sort of adversarial environment that really didn't need to exist, an adversarial environment between what was happening in Bitcoin Core development and what was happening with these private companies. If we're investing responsibly, understanding where the protocols are and where they're going, then we can avoid those sorts of dilemmas in the future. And so that's the third piece of the puzzle when investing. So we're looking at the team, the market, and the way in which it engages with the underlying open source technology, and making sure that all of those things work together really well.
Well, that's really interesting. I haven't heard that put that way before. Is that S2X issue was the result of SegWit 2X issue was the result of the kind of a fundamental misunderstanding of the technology? That explains a lot.
I think so. That's what it looks like to me.
Oh, that makes sense. So, obviously, I work at Bitfinex on the STO team, and I'm wondering what your thoughts are on STOs, because we talked previously about how ICOs, part of the original pitch, was the democratization of investment opportunities, and I think, maybe STOs are a better way to do that, because it's centralized finance. You have a regulator, you have clearly defined obligations on the issuer side, and then you've got clearly defined rights on the investor side. So what do you think about STOs as they apply to kind of, Bitcoin companies? And do you think that we could see Bitcoin companies go the STO route to raise capital rather than going to IPOs?
That's a good question. I think that's a really forward-looking question. So a couple things. First, I want to say that one of the things that I think is really underestimated in the Bitcoin community is just how powerful of an ally Bitfinex has been. So I just want to note that in relation to your mention of Bitfinex. I think they don't, always get the credit that they're due. But of course, sort of people that have been around and paying attention long enough know that Bitfinex has made, very meaningful decisions that have, supported Bitcoin's healthy growth and progress. So on the security token side, I think that we're in a period now of early discovery. And I mean that both in terms of the technology and the sort of economic incentives around what happens when you can tokenize a security. And so I think from my perspective, the important thing for an investor to do is to pay attention to the early experiments, and to then, sort of discern what the data is telling you. So we try to do that unemotionally, and almost as like scientists looking at, a data set. So that's where I think we are. I don't think, I don't have an answer for it. I'm obviously hopeful that the innovation can be used to democratize access to company investing. And, now I, wait early signs that that's true. I feel like it would be a better question for me to ask you than for you to ask me. I feel like you're the expert on that one.
Yeah, I definitely hope that going forward, our best and brightest, our biggest companies within Bitcoin will choose to go the STO route. I do feel it is slightly disappointing to see, all of the biggest miners go to the Nasdaq, Coinbase go to the Nasdaq. But I also understand that the ball is probably within our court. That the STO industry and people like Bitfinex Securities that are building out this industry, that we need to prove that it's economically viable. So I think we need to do a bit of kind of growing on our side first. But I think there's definitely a lot of potential there, and that's kind of a big part of where I see things developing, and probably a big part of what I think the opportunity is for companies like Bitfinex Securities, because capital markets I think have been really resistant to technology, maybe out of all industries, for like 10, 20, 30 years. So that's kind of the pitch that I typically make, is there's been some superficial changes to the way, like online brokerages and stuff like that. But fundamentally, the way that trades are settled, the way that assets are custodied, the way that issuances are conducted, it really hasn't changed that much. So I think that's kind of the pull factor for us. And I think probably things are accelerating. I think over the next, maybe year or less, we'll probably see some big changes within the STO industry. So hopefully, the next time we talk, that'll be a realistic path forward for some of your portfolio companies, and you can give me a call at Bitfinex Securities and we can help you out.
You would be my first call. Bitfinex would certainly be my first call.
So shifting gears kind of slightly, how do you think the importance of Bitcoin varies globally? Because, I've noticed that in developing countries, it's basically a speculative investment. We don't really need it, to be honest, especially on the payment side. We have so many things that work really, really well. My favorite, of course, being cash. And but in developing markets, in places like El Salvador, which I think it's kind of overlooked for what's going on there, it's a completely different thing. And in remittance markets, right, where maybe someplace like the Philippines or something, it's a different story. Or places where there's a lot even worse inflation than what we're seeing in the Western world. So what are your thoughts on that, about how the value proposition differs globally?
That's very astute. So we are investing with a global mandate. And what that means to me is that in addition to backing founders from across the globe, we're backing companies that address the needs of folks across the globe. And so, the sorts of products that we use in places of privilege are going to be different than what people will use of lower economic means. And I think that what Bitcoin is best to do is to meet people where they're at. And so this is part of the non-judgmental piece that I talked about before. I'm not of the mindset that there's a right way to use Bitcoin, actually. What I think is that it's exciting to see founders thinking about what Bitcoin can do and who it can provide value for in such a breadth of ways. And so, as you said, in the US or in other developed nations, or with people of economic privilege, people are participating in Bitcoin to speculate, to hedge their portfolio, maybe to opt out of the current system that they reside within due to their geography, or they're using it, for fun. It's sort of a way to do something interesting. In developed markets, people are using Bitcoins as a way simply to connect to the global economy. They're using it as a way to leapfrog, other technologies that don't exist for them yet, or as a way to have access to gated financial tools. So if a bank won't give you a debit card or a credit card, if they don't think that they don't deem you worthy of that, how do you participate in global e-commerce? You can do that with Lightning Network.
Yeah.
Also, on the flip side, of course, there's a way to earn using Lightning, earning on Lightning, and engaging with a company that can pay you efficiently as an individual versus as part of, sort of an outsourced team that's been aggregated together, and that can be empowering. And so, outside of privileged populations, I think that people are using Bitcoin sort of as a way to achieve greater financial equality and to participate in a global economy on more even grounds.
And so like within, your portfolio and kind of the companies you're looking at within the Bitcoin space, where do you think the really exciting work is happening at the moment?
So within our portfolio, I think if you look at our portfolio today, and you can, it's public on stillmark.com, you see that we're paying a lot of attention to infrastructure development. We're looking at the basic building blocks of what needs to exist for people to use Bitcoin and Bitcoin technologies. So I mean Bitcoin the asset and Bitcoin technologies, Bitcoin Core and Lightning Network today. And we're hopeful, to be able to expand our mandate to include sidechain and other sort of second layer technologies or third layer technologies as well, built on Bitcoin, of course. Um, so the basic building blocks need to be there. So that looks like, how do you secure your Bitcoin? I already mentioned Kaza. It looks like, if you have Bitcoin, how can you prove that you have it so that you can get a credit card or, successfully apply for and obtain a mortgage? That's Hoseki. Um, if we're thinking about Lightning Network and what needs to happen for Lightning Network to scale, we're thinking about things like, how do you, effectively spin up a node? What does it mean to have a node if you're not deeply technical, or if you don't want to allocate, the resources to doing it yourself? That looks like voltage. If you are a node operator, how do you do that efficiently? How do you professionalize your business as a node operator? With that in mind, we backed Amboss Technologies. And so what we're doing is we're very heads down on looking at basic infrastructure, the things that just need to exist for Bitcoin adoption to continue to grow and for second layer technologies to scale. And then after that, we're looking opportunistically to find really talented founders that are building with Bitcoin technologies. And so it's simple. We're just doing those two things. Um, you asked about interesting areas of promise and where Stillmark wants to participate. And one of the areas that I think is really compelling is something that you mentioned in your last question, which is payments technologies in emerging markets. So what we saw in 2021 is these sort of tests of, can Bitcoin scale and really be sustainably useful in emerging markets where people are unbanked or underbanked. And we saw in 2021 that there's an acute problem that Bitcoin can solve. For instance, in El Salvador. And so
Yeah.
all of that is very exciting. I think it makes sense that, there's sort of like this reverse condition for Bitcoin versus other sort of traditional frontier techs, which is that while most, frontier technologies launch and gain depth of adoption in developed markets and in the US first, for Bitcoin and for Lightning Network, it could actually be developed markets where you see adoption really, gain steam before you see that come over to developed markets. And so, one company that we backed to take advantage of that, and because we thought they were such good stewards of Bitcoin and of Lightning Network, is Ibex Mercado, which is a team based in Guatemala that developed merchant payment infrastructure in El Salvador, so that when people in the second half of 2021, when adults in El Salvador got the $30 airdrop of BTC, they could successfully make use of that. And the way people did that was, to take their family out to dinner, to go to the pharmacy and pick up meds that they needed, to go grocery shopping. And so we know that Lightning Network was very useful as a payments rail. The question is if you're of lower economic means, if you're making a few $100s a month, say you're making $400 a month, and the bills that you face each month are equal to what you make. You have to spend $390 every month to $410 every month to support your family, and you're making $400 a month. Can you tolerate BTC's volatility? And so, it's been encouraging to me to see this this sort of adoption infrastructure development cycle emerge, where we introduce the infrastructure in a new market, we pay attention to how it's adopted, we look at those KPIs, and then we use the feedback of that to drive further infrastructure development. And so with the launch of assets on Lightning Network, we see an opportunity to provide Lightning Network in emerging markets without forcing people to be exposed to Bitcoin's volatility, which I think is a really interesting first step in allowing Bitcoin to be maximally useful to poor people. And it's also a really nifty way to get a Lightning wallet on people's phone. It's a nice Trojan horse of getting Bitcoin technology to people, before they have the means or the appetite to expose themselves to Bitcoin's volatility. So I'm very, excited to see what happens with this.
Yeah, I think this is something I think people are sleeping on. I think particularly kind of Western investors, in that this has massive implications for Bitcoin's network effects, like from kind of a Metcalfe law perspective, that has massive implications for like the forward-looking price. And none of that is in the, the blue chip investor kind of reports, the guys that are commenting on this. They're all talking about inflation hedge, and this hasn't even been looked at. So this is, I think, a really interesting thing from a number of different perspectives.
We never talk about inflation. We never talk about inflation hedge, not because we're not, keen to understand how Bitcoin will be useful as an inflation hedge in the future as it matures as an asset, but just because there's more acute needs that Bitcoin can address. And here's something interesting to note that's obvious. Bitcoiners know this, but sometimes it's not the first thing we think about when we think about Bitcoin's price appreciating. But historically, as adoption has risen, so has Bitcoin's price. And, I think that, really what that means is that if some of the companies that Stillmark is backing and others, founders building in the Bitcoin space, are successful at gaining users and growing Bitcoin's adoption, and then expanding the utility that Bitcoin can offer, what they also should be doing is increasing the fundamental value of BTC, the asset, in a way that 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 leads to not just number of people go up, but number go up. What I'm really excited about is number of people go up, but as the number of people go up, the price historically has gone up. And so this is something, we keep in mind when thinking about our work. Sometimes we get asked if we intend to beat the returns of BTC, the asset, and we don't. And the reason why we don't is because if we're doing really spectacular work, and if we're helping accelerate founders that are doing spectacular work, then what we should be doing is helping support the appreciation of BTC, the asset. That's what we should be doing. And so I think the only, really way for us to succeed is if, I hope that Bitcoin always beats a startup portfolio return. And I hope that because I hope we're backing founders that are doing good work for Bitcoin and that are driving adoption and expanding Bitcoin's utility.
That's great. I think that's probably a good place for us to wrap it up. I want to be respectful of your time, and I like to end on an upbeat note. So that's really good. Alyse, I really enjoyed this conversation. Thank you for taking the time to talk with us today.
Thank you for having me. I really appreciate the invitation, and I think so highly of you and both of your teams, Blockstream and Bitfinex, and I hope we'll do this again.
Great. Thank you. That's great. Thanks a lot.